3, 4. Hi, if you could start the meeting,
Yeah,
please.
sure. Good afternoon. This is the February 28th meeting of the Audit Committee. It is currently 2:02 p.m. Any members of the public who are joining us remotely during the public comment period, you will have 3 minutes to provide your public comment. Please use the raise hand function. And with that, I will proceed with roll call. I will start with our committee chair, Makachuk.
Present.
Director Tyson.
Here.
Director Sergio Lopez.
Here.
And joining us remotely, committee member Sangha.
Here.
I'll note that all of our members are currently present.
Thank you. With that, I'll actually call the meeting to order at 2:03 p.m. on Friday, February the 28th. And at this point, I'll open it up for public comment on any items that are not on the agenda. And if there's no one appearing here in the offices, and if there's anyone appearing remotely, please raise your virtual hand.
No hands raised, Chair.
I'll close public comment and we'll move to the consent calendar. We only have one item. If anyone would like to pull an item on the consent calendar? No?
I move approval of the consent.
I'll take public comment just before that. If you're a member of the public and you wish to make a comment on the consent calendar, please raise your virtual hand.
No hands raised, Chair.
I'll close public comment and bring it back. And I believe Director Tyson had a motion.
I'll second. Yeah, I had that motion.
We had a motion. We have a motion, a second. All in favor? Aye.
Sorry.
Oh, right. I'm sorry.
No worries. Chair Makachuk.
Aye.
Director Lopez.
Aye.
Tyson.
Yes.
Committee member Sangha.
Aye.
Motion carries unanimously.
All right. Now, we'll get to the regular calendar, but before doing so, I'm wondering if we'd like to change the orders so that since we've got the audit partner here, we could maybe move that up to the top of or second on the agenda, number 3. So since we're paying his freight.
Fine with that.
Everyone agreed?
Mm-hmm.
All right, so we'll go item 2, then we'll do item 5 becomes item 3, and then we can flow from there. All right. With that, item 6 is elect chair and vice chair of the 2025 SVCE Audit Committee. And I'll just say that I would like to be chair of the audit committee for the next fiscal year or the next calendar year or whatever. But I don't know if someone else would like to be chair.
I'll nominate Director Makachuk.
I'll second it.
We have a motion and a second. Do we want to do so roll call? Oh, do we want? If you're a member of the public and you'd like to comment on this, please raise your virtual hand.
No hands raised.
I'll close public comment and bring it back for a roll call.
Director Lopez.
Yes.
Tyson.
Yes.
Makachuk.
Aye.
Committee member Sangha.
Yes.
Carried unanimously.
All right, thank you. So then we've got item number 5, which is now item number 3.
Chair.
Vice chair.
Oh, sorry, geez, done this twice now. Would anyone like to be the vice chair? Would they like to nominate themselves or would you like to nominate someone?
I'll volunteer.
You'll volunteer?
If there's not anyone else interested. Happy to.
I'll make that motion to nominate Director Lopez for the vice chair position.
Seconded.
We have a motion, a second. I'll take public comment on this before we have the roll call vote. If you're a member of the public and appearing remotely, please raise your virtual hand.
No hands raised, Chair.
All right, we'll close public comment and we'll bring it back for a roll call vote.
Chair Makachuk.
Aye.
Alternate Director Lopez.
Aye.
Tyson.
Yes.
Committee member Sangha.
Yes.
That motion carries unanimously.
Thank you.
All right, now we can move to item 5, which is now item 3, receive financial audit report from Vicente and Brinker and recommend to the SVCE Board of Directors that we accept the audit findings. And do we have Kellen, are you going to do a presentation on this?
I am. Thank you for having me. It looks like somebody's, I'm guessing Andrea already is controlling the presentation. Can everybody see that? Great. Next slide, please, if you would. Just want to say I appreciate the presentation is all inclusive, but I appreciate you moving us up in the agenda. So I am Kellen Gilbert. I'm the audit partner on the engagement. Been in public accounting for a very long time, and I currently oversee multiple CCA audits. Alana is the senior. She's also joining us today. She's been in public accounting for 4 years and 2 years working on CCAs. Not mentioned here is Ali Schaefer, if you recall from last year. She is still currently on the engagement, but she is out on maternity leave, and we are excitedly hoping to get her back sooner rather than later. Next slide. So just a little bit of housekeeping here before I dive into the details and the results of the audit. As of this January, Pacinti and Brinker, we've combined practices with, and I'm still practicing this name, Kosmatka, Donnelly & Co. We just refer to them as KDP. And all the former partners of Pacinti and Brinker are now partners of this new revised KDP. And this is just step one of a multi-layered merger that's taking place. So we will actually have a brand new name that we are revealing in just a few months that will be a platform for multiple firms. We're really excited about this change because we're still maintaining local control at our local California office here in Santa Rosa. Nothing's changing from that perspective. We're still working with the same great clients as ever, but now we have a lot more resources, technology, expertise that we can use to provide even better service to our clients. Most importantly, there are no changes to our staffing, to the timing of our services, or to the cost for you. Next slide, please. And we just wanted to make sure that we were very, very explicit that we are currently under contract through, it's technically through September 2027, but it's actually for the 9/30/2026 audit. That is not changing. From our perspective, there's no changes to any of the contract terms other than the name, the changing of the name. Everything else that I could possibly think of, there's no changes. The staffing is not changing, and I will continue to be the partner on the engagement. So no other way to explain that other than just no changes other than the name from your perspective. Next slide, please.
May I ask a question on this slide?
Absolutely.
How long would your maximum term be as the lead partner on the SVCE engagement?
That's a great question. I believe through 2028, if we were so lucky to win you back as a client in 2020 through that period. But I can double check that. I'm pretty sure it's 6 years to California mandatory auditor partner rotation.
Great, thank you very much.
Yeah, I've got that code section written on my desktop, but I can grab that for you and send it to you. But I'm pretty sure it's 6 years, and I think this is my 3rd year. Next slide, please. All right, so now we get to the good stuff, and we are not burying the lead. We issued an unmodified opinion, or a clean opinion, which is, in our opinion, the financial statements are free of material misstatement. So again, that's the highest level of cleanest audit opinion that we can issue. Next slide. And then for those of you who have been on this committee before, will remember I always like to start with this slide just to refresh everybody's memories, just because I think this is one of the areas that there's the most common confusion between what an actual auditor does and the public's perception of what an auditor does. So just like to state that management is responsible for preparing the financial statements. They're responsible for all the underlying information that gets captured in those financial statements, and they are responsible for establishing a system of internal controls to ensure the accuracy of those financial statements. We, as the auditor, are responsible for providing our opinion on whether or not those financial statements are free of material misstatement. And we do that through considering risks to the financial statements, considering control risk as well as inherent risk, essentially how complex are the underlying transactions. And once we have completed our risk assessment, we perform a series of tests, analytics, and confirmations to address those risks. Additionally, we review the financial statements to ensure their accuracy and to make sure that they are free of error or what we consider management bias. Next slide, please. So the audit starts with our risk assessment procedures, gaining an understanding of the operating characteristics, getting your accounting policies, practices, performing walkthroughs to make sure that what you have written as your accounting processes are in fact the procedures that are taking place. We use our knowledge of the industry and professional guidance to then finalize our risk assessment procedure, which is really going to be what drives what auditing procedures we select to address those risks. Next slide, please. So this is just some of the significant areas of focus during the audit. Revenue recognition is always a very important aspect of any audit. We want to test accounts receivable and accrued revenue as well as revenue by taking a sample of customer billings. We additionally trace the total cash received throughout the year to total revenue for a reasonableness check on the amount of revenue that's being recognized. And then also of the sample of revenue that we test, we want to make sure that the method of how revenue is being recognized is consistent throughout the year and that you're not changing your processes throughout the year depending on the time of year. Cash is one of the easiest areas to audit, but is also one of the most important areas within the financial statements, especially to the users. So we send confirmations to financial institutions to ensure that there aren't any discrepancies, and if there are any reconciling items, we test those as well. Next, thank you. Accrued cost of electricity and other liabilities. We mostly test this through a review of subsequent disbursements. So essentially, we want to test outgoing cash payments and then trace those back to the underlying invoices and the underlying related liabilities to make sure that everything that should be captured in the fiscal year is captured. So this is a cutoff procedure as well as a completeness procedure, essentially making sure that all the liabilities are present and that no expenses that should be in the next period accidentally got captured in the current period. Lastly, but very important, we do review the financial statement disclosures. We want to make sure that all the required disclosures are present, that it's complete without any bias or any area where we think that management could potentially mislead the reader by essentially weighing in on the disclosure in a non-factual way. So we review for all those, and we didn't note anything like that, which I think is what the next slide will be saying. So these are the required board communications or to the required communications to those charged with governance, which is this committee. There were no new material accounting policies adopted during the year. We didn't identify any significant or unusual transactions Essentially, that would be a transaction where we in management might not agree on the appropriate accounting treatment. So we did not identify any of those. We did not propose any audit adjustments to the financial statements. And we also sent a separate letter noting that we did not report any deficiencies or material weaknesses in internal controls. Next slide, please. And I think this is the last slide, just more required communications. Essentially, we want to make sure that we're having an open dialogue, which is really the purpose of this meeting, so that you have a chance to ask questions or hear directly from the auditor. We didn't have any disagreements with management. In fact, I'd like to specifically thank management, the management team, and really Mike Maher for all of his excellent work. We issued the report on time. We got the underlying information that we needed on time, which we greatly appreciate. We also didn't have any scope restrictions, meaning that everything that we asked for, we were given, which is really important to make sure that we weren't limited in what we could access. So again, greatly appreciate management's help. A lot of people think that auditors and their clients have a contentious relationship. We are required to be professionally skeptical of information that management gives us, but that doesn't mean that we can't work well together with management to have the audit go smoothly. And so again, I am appreciative of that. And I think that is the last slide. So I'm happy to answer any questions on the presentation or the audit or the financial statements.
Thank you. I'll just make a comment before opening it up for questions and discussion. And my comment is, and you've heard this before, it seems like it was a pretty boring audit, which seems to me a good thing to have. Is that correct?
Well, I do it for a living, so I don't consider any audit boring, but I wouldn't argue with that description. Yes, a boring audit is always a good audit, and this went smoothly without any major disruptions. So from that perspective, it was boring. And I also like to point out that if we did have something that arose during the audit, I would not wait till the very end to alert this audit committee. If there was something substantial that caused a disruption, you would know about it prior to this meeting.
Great, thank you. Any questions for the audit team or management? No. Before we proceed, I think we'll just open this for public comment. I'd like to open it for any member of the public to provide any comments on the audited financial statements, including the audit report. There are two.
No hands raised, Chair.
I'll close public comment on this and bring it back to the audit committee. And did everyone review the financial statements?
So let me go ahead
Sure.
and comment. I'm new to this committee, but I've been on nonprofit audit committees for about the last 10 years. So I'm very pleased to see what I saw here. I'd actually learned more about our financials. I mean, there were questions, I think, well, our policy says we'll have this kind of, but what kind of readings? I mean, what kind of grade paper do we, and I saw the answers in there in terms of the range of risk, and which is our own risk outside of the auditing risk. But anyway, I was comfortable that we were presented a straightforward story here today.
Okay.
Which the short answer is yes, I did. I looked at every page.
Did you click on the link to the CCCFA financial statements?
Did not.
Okay. Maybe one thing, Kellen, that you could outline briefly is you are responsible for opining on the financial statements, but in the financial report, it includes the MD&A and other things. Can you just give a brief description of what you're responsible for and differentiate between the financial statements and the MD&A, just so that everyone understands that?
Yeah, absolutely. Thank you for asking that question. So the MD&A is actually unaudited. It's management's discussion and analysis, which, as the name implies, it is completely management's product. We do review the MD&A carefully. We try to correct any spelling errors or anything that we do notice. We trace all the numbers within the MD&A back to the underlying information that are on the face of the financial statements. However, we do not audit or test that every implicit or explicit assertion made in the MD&A is true. So essentially, it's management's opportunity to explain the variance between the prior year and the current year, or all the years that are presented. However, there are a lot of, like I said, assertions included in the MD&A, and it would be, if not impossible, but very time consuming for us to go through and test all of those. And so that's not the intention of the MD&A. The MD&A is really management's opportunity to explain to the reader in their own words what took place during the year. So that is an unaudited section of the financial statements, and that is different than what we consider the basic financial statements and the notes of the financial statements, which are audited.
Okay, thank you. And then I guess the other thing that I'll just make as a comment is that in terms of preparing the financial statements and the note disclosure there too, there's a lot of interpretation by management, and the fact that the notes, the disclosure that's in the notes, some people just look at the balance sheet, income statement, the funds flow, but the what is disclosed in the notes is very important. And your report, your audit report, covers the financial, the notes to the financial statements and the disclosure in those notes. Is that correct?
Yes, correct. And our you can read specifically on the audit opinion under the required supplementary information, where we explain that we perform limited procedures, but not the same level of auditing procedures on the MD&A compared to the basic financial statement, which is defined as the statement of, excuse me, the statement of net position and the notes.
Okay. I'll make my final comment, and I sent a memo to the audit committee, and Amrit pointed out that we actually had a separate meeting before the financial statements were finalized. And we went through the draft financial statements and the disclosure at that point in time. So I apologize for not including that in the memo, but I just wanted everyone to know that we did have, it was what, a good hour discussion between you and myself and Mike Marr, and Karen. Karen was there as well. So I just want to make sure that Mike, the question is, who's Mike Marr? And he owns, or is the principal behind Marr Accountancy. And
I saw them listed in the roles slide. Yeah.
Yeah, and I would consider him to be what would be called a chief accounting officer, because he's the one that actually prepares the financial statements, I believe. And well, everyone reviews them, but he's the principal behind that. So we went over the financial statements in a fair amount of detail. Okay, well, with that, if there's no other comments, perhaps someone would like to make a motion.
I just want to say I appreciate the memo and all the conversations and additional work outside of this committee that you put in that. So thank you for sharing. I'm happy to make a motion to accept the results of the audit.
I'll second that.
We have a motion, a second. May we have a roll call vote, please?
Chair McIntyre.
Aye.
Vice Chair Lopez.
Aye.
Director Tyson.
Yes.
Committee Member Sangha.
Yes.
Carried unanimously.
Okay, with that, I'm not sure, Kellen, if you'd like to leave or if you want to stay.
We're in the thick of our busy season, so we're gonna hop off. And again, I appreciate you moving us to the top of the agenda. And again, appreciate you guys have been a pleasure to work with, and look forward to next year.
Okay, thanks,
Kellen.
bye.
See you at the board meeting, though.
Yes, that a little too soon with that. Yes.
Next item on the agenda is overview of committee function. This is a discussion. And
Yeah, so this committee probably doesn't need it since we have a lot of returning members and we have George who is so familiar with you. Welcome, we appreciate you being part of this committee. This is an important committee. Fair, but we appreciate your really important function for us. So, George, this gets to your question earlier. In SVCE, you know, some of the functions listed here are in-house budgeting and financial forecasting, rate setting, analysis, liquidity management, risk management, that's energy procurement risk management, as well as enterprise risk management. But they're all the key accounting functions we outsource with our accountancy.
I knew a mayor once. That's how he said it.
And he's actually very familiar with CCAs. He at most, if there's few exceptions, but he's the accountant for most of the CCAs, being CCCFA. So the purpose of the committee is to oversee the external auditors' audit of the financial statements. And remember, the auditors are working on behalf of the board, review management's work. As you heard from Kellen, anytime you appear weaknesses or deficiencies, the board receives the audit, and as you know, our fiscal year ends September 30th. So this is for September 30th, fiscal year ending September 30th, 2024. We will be now taking this to the board. See there, we just made it.
Yeah, I just did some math there.
good thing that's not 11 months.
11 months.
You don't have enough fingers.
Oh, yeah, okay, now I can pick up my shoes.
So
Just a moment. To put that into perspective, there are some companies that are SEC registrants that will have a December 31 year end, and they will file all of their SEC, their 10K report, annual report on Form 10K before January 31st. So
we're in the business of the CAISO energy where we don't get settlements a good chunk of a month or so later, and even CAISO reserves the right to go back and review our numbers. I think they're far out of 3 years, but usually it's within a month settlement. So that's why the treasury report that you get, it's actually quite an effort to get it out every month. It's the last minute we get it right before the board postings. Mike knows to prioritize us. Most other CCAs do it on a quarterly basis for that reason, because it's hard to get the numbers behind the scenes. This, I'm going to skip this slide since we just did this with the auditor. The other thing I'm going to cover is an IT audit. So this is different than financial audit, and the first two audits listed their security assessment and an IT audit. This is sort of our own doing. We're not required to do this. And we've been doing the IT audit since our inception, basically looking at all our vulnerabilities in our systems and infrastructure. And then we also moved to security assessment, looking at security threats and risks, namely cybersecurity. And the third one there, the CPUC mandated audit of the customer meter data. So that's a mandated audit, and there's an annual sort of mini audit that happens on an annual basis, and then there's a full audit every 3 years, and this is one of those full audit year. So we'll be completing that and filing that in April of 2025. I'm not gonna go too much into details because we just had Nick, a senior manager for IT and admin services, walk in, and there is a agenda item in the closed session where we'll talk about some of the cybersecurity threats and risks. And timings of the meetings, so this committee usually meets twice a year. Sometimes we have met 3 times a year, but we can obviously meet as often as we need to. So the next expected meeting of this committee is likely to be in September. And that's right before our fiscal year ends. And that is when the auditor will come in and plan for the audit. The fiscal year ending September 30th, 2025. Go through the scope and audit, initiating the audit. So you'll have that opportunity to meet with the auditor. Questions on the functions of the committee or?
I'll make a comment. I believe that Sacramento should change the topics of closed sessions to include audit committee meetings in particular. And everything's got to be covered under the Brown Act with full transparency. But I think that's completely inappropriate for an audit committee. And for example, the audit committee should be able to meet with management one-on-one or group on group in a closed session to make inquiries as to any disagreements with the auditors on accounting treatment or errors in the financial statements, all of those things that there weren't any, but those conversations are in most organizations other than government entities are behind closed doors. And they're independent of both the auditors, and the same conversation is between the audit committee and the auditors and the audit committee and management. So this is something that I think should change in Sacramento, but it's just me, in my opinion, pontificating on this. But anyways.
Yeah, my nonprofit audits, generally, we have the option to say the audit committee will meet with the auditor in the absence of staff to have that kind of, are you sure? Is there really anything else there? Now, granted, you can decline to do that, but you always have it as an option. And so we didn't have that option.
Right, but if that meeting was to occur, it could not appear in a closed session. It would have to be, oh, management, leave the room, please. Well, everyone can look at the video, you know, and all that. I mean, it is not independent, and I feel strongly about that because I think that's just, you know, in my insight into government over the past 5 years has been, I think there's some improvement over it. So anyways, but your point is well taken. So I'm sorry, I interrupted.
No, that was it. That concluded my presentation.
Okay, so you put this in because we've got a new member and you just want to make sure that everyone understands the roles and responsibilities and the timing and the meetings.
We have new members and we don't meet that often, so we only meet usually twice a year.
That's a normal thing to cover, just like the auditor gives their overview of what auditors do.
Okay.
I have a question. Do we have the, and I'm sorry if I'm not as plugged in, do we have the dates for all future meetings?
No,
tentatively?
most likely the next meeting will be in September and Andrea will reach out for that.
Okay.
And if you have any preference, you can let us.
That's fine. I mean, I think that's far enough ahead that we'll work out to schedule it. I was just wondering.
So it's a discussion item, but I'll ask if there's public comment on it. Please raise your virtual hand.
No hands raised, Chair.
We'll close public comment on that. and move on to approve assignment of auditor contract to, and I won't try the name, it was KD and Co. And do we have a report on that?
Yeah, there was a staff report. Basically, I'll cover it. So as you know, right, and when the audit was just about complete, we were notified that they were merging with this new firm. And in our contract, as you know, the board hires the auditors. And we had gone through an RFP about 3 years ago, and the audit committee reviewed the audit. That's the year we met 3 times. And then recommended that we hire Vicente and Brinker. We were also our auditors before, but we got a new audit partner, and we changed it every 5 years. I think our policy is every 5 years, even the state may have up 6 years. I'm not 100% sure. I think it is 5 years. But anyways, we still have term remaining, but under that contract, if Mike looked at the contract and said, this is, we view this as an assignment of their merger with the new firm, and we have the right to accept or reject that assignment. Given that there are still 2 audits left, we're recommending that we continue. And so we're recommending that we go ahead and accept the assignment, and that if the audit committee approves, supports this, recommends that we recommend that audit committee recommend to the board that they accept the assignment, and we would put it as a consent item to make sure that we have an effective contract in place. Mike, correct me if I've misstated anything.
Mike, did Amrit state that correctly?
Yeah, no, that was correct.
Okay. Any questions for Amrit? No? I'll take public comment on this. You're a member of the public and you'd like to make a comment, please raise your virtual hand.
No hands raised, Chair.
I'll close public comment and bring it back. I'll just make one comment on this, that I was surprised when I was going through the financials. I'm like, whoa, wait a second. This is a natural evolution, and I think that's a success for Vicente Brinker to be able to join a larger firm. I think economically for the partners and the staff, it's good. There's economies of scale. I think they'll get more sophisticated audit tools and that sort of thing. So I think it's all good, and I think it's a positive thing, not a negative thing. So I would concur with management saying that we recommend this. So other comments? No?
Committee Member Songa did have his hand up.
Oh, I'm sorry.
Nope, no worries. I just wanted to, I guess it was a question for staff, was if they had any concerns. Obviously, it's a recommendation coming from the staff. Do they foresee any issues with this assignment? And I understand it's for 2 years. Is there an option to revisit this after the first year?
I don't think Mike, do we have that option in the contract?
I'd have to review the terms, which I can try to do briefly.
So while he's looking that up, we have no concern because, as you said, I mean, as you heard from the audit partner, Kellen, nothing under the contract changes in terms of services. He will remain the audit partner for us. So we have no concern for that reason.
Thank you.
We're waiting on you to answer, Michael.
Yeah, thank you. And we do have a right of termination upon 7 calendar days notice in the agreement, so we can reevaluate this on an ongoing basis. We're not necessarily locked in.
Thank you.
I move that we approve assignment of the auditor contract to the KD, was there a P? Cosmatica Donnelly and Company LLP.
Second.
We have a motion and a second. May we have a roll call vote, please?
Chair Makachuk.
Aye.
Vice Chair Lopez.
Aye.
Director Tyson.
Yes.
Board Member Sangha.
Yes.
That motion carried unanimously.
All right, now we're on the last item of our regular calendar, establishing rate stabilization fund under GASB 62. This is informational.
So while Andrea brings that up. So this is an informational item for this committee, because this committee does not make operating decision. We have a finance committee, and finance committee met this Wednesday, and we went through this same item that I'm gonna go through here. The finance committee recommended that the board actually establish a rate stabilization fund under GASB 62. We plan to submit this as a consent item to the board at the upcoming March meeting. So I'm providing this here as an information because this committee is very familiar with our financial statements, and this is primarily affecting our financial statements. And what I'm planning to cover is the accounting rule. You know that there are other CCAs that are doing this. What's the implication? I'll show you an illustration of a financial statement. One of the CCAs.
With some very hilarious misspellings.
Oh, was there?
Oh, yeah.
Okay, they have a different auditor.
Well, it was just an example. I saw that.
We talked about the impact on the readers of the financial statements, you know, because again, this affects how doesn't affect our finances. It affects the way we report our the reported statements on the statements. So, and then we'll just draw a little distinction between operating reserves and rate stabilization funds to make sure there's no confusion there. And then the criteria for deferring and recognizing revenues. So that's the outline.
Can you go back one slide? Criteria for directing, or did you say deferring?
Deferring, sorry, that's a typo.
Okay.
Everywhere.
I didn't catch that one.
Okay, so GASB basically allows us, and this is very common in governmental entities, where we can defer revenues to a future period. So basically, this is a mechanism for us where we can defer revenue recognition to future periods. And what we are proposing here, and this is somewhat different than other CCAs, is that we defer to the extent we have earmarked funds. What are earmarked funds? If you know, for those of you on our board, you know that we direct a lot of money towards programs. And then there are other set-asides, for example, like buying a building. But in the financial statements, obviously, under GAAP rules, we don't recognize expenses until we incur them. So we have a lot of set-aside money that is not hitting the financials. But we set that money aside when we have periods of good revenues or good financial year. What this will enable us to do is to basically, in the years when we have good revenues or good contribution to reserves, and we do we can basically defer revenues to future periods, so it aligns with when we incur the expenses. Okay, so that's what's going on here. And we can start with this fiscal year, but we cannot go back any of the prior years. So all the prior year marked funds, we can defer up to those amounts, but using future revenues, not in the past.
Okay.
Go ahead.
So if we do put funds there, do those funds no longer count as part of our days of cash?
No, that's a different concept. And I'm going to cover that in a slide.
Okay.
So just to highlight this, we are not alone in this. We have other CCAs that have been doing this. They call it a rainy day fund or a surplus revenue fund, so we are only directing what we call, the board is already earmarked. So here's an illustration of MCE. This is a Marine Clean Energy under the CCA. You can see on the statement on the left, this sort of like our income statement. The year in which they defer the revenues, you can see we in 2024 they reduced they transferred 40 million to rate stabilizations. For that year's revenue, they effectively reduces that revenue. And on the balance sheet on the right here, you can see there's a liability created where that now sits on the liability side. So nothing is happening with actual money. This is just the accounting and how information will appear on the financial statements. So basically that liability sort of reduces the net position, but it's in recognition, for us, it'll be in recognition of, we have other direct earmarked funds that money is reserved for. Okay, so what would be the impact?
Can you back up just for 1 second? So they've got a March 30 year end?
Yeah.
Sorry, I just wanted to see what the year end was.
Committee member Sung also has his hand raised.
Yes.
A quick question. So essentially on the statement of net positions, what you're saying is if there were no deferred inflows, we would essentially see that $70 million as part of your net position as unrestricted?
Yeah. I want to be careful with the word restrictions. There's no restrictions here. It will just flow to the bottom line. So here, what we will do is basically we will move the revenues, we'll lower the revenues for this particular year. On the balance sheet, it will show up as a deferred liability. It will come, I should say, on the operating reserve fund, you can see deferred inflows of resources is how they reported it. You can see the balance there.
And this is in addition to the existing operating reserve that the policy that SVC already has, correct?
Yeah, so I'm going to cover that in a slide. Just before I get to that, we view overall this is a positive impact on the readers of financial statements. So who are the readers of financial statement? One is the public. It kind of shows them that there are earmarked funds set aside. So when they look at the bottom line, they know that now this is accounted for, whereas if they were just looking at the statements, they have no way of knowing what the board has set aside funds or activities we have ongoing that those funds will be used for. The credit rating agencies, we have talked to other CCAs that do this, and they said generally it's positive because they see that we are setting aside, demonstrating that there's board's commitment to set aside funds for rate stability, and they know what's going on. They know that money is still there. The board were to redirect those funds. And the other major constituent of our statements is the counterparties, and they want to know that we have good financials because it affects their credit risk when they transact with us for all these billions of dollars of energy. We think it's positive for them as well because it will show more stability in the financial statements. Because let's say we didn't do this 1 year, we had the big expenditure. Somehow Justin just did a huge program implementation. Even though we had a positive year, it will show we had all these expenses, a very negative net contribution to reserve to recognize that using program expenditure. But with this instance, we'd be able to basically recognize the deferred revenues to match that corresponding expense.
Interesting. So in a regular corporation, you might have a capital expenditure and then you move you don't disrupt your income statement so much by having it put in as capital that you take back as depreciation. In effect, it looks like you're treating a giant program expense almost like a capital thing to be able to moderate how it appears on your books.
It's the timing. Yeah.
So, George, think about this, and I'm not sure the way Los Altos Hills contract is with the sheriff. But in Monte Sereno, for example, we know that every few years there could be some sort of big crime investigation that we have in Monte Sereno. And we know that that may happen once every 10 years or so. I'm just coming up with a hypothetical example. And in the 1 year that we have that, all of a sudden there can be a big, huge expense increase. And I've been thinking what we should do is think about, saying, hey, every 10 years something's going to happen. So we kind of build up a fund. And then when it occurs, then it doesn't hit our bottom line and our, reserves
Like a
dramatically.
new roof fund.
Replacement
For us,
reserve.
we actually have a reserve, we put it as a reserve for natural disasters. Those kind of things, you can't predict when they are, but you want to have a reserve there. Going off topic, aren't we?
Very much. Okay, so this is the question. This is to answer this slide is to answer the question, the difference between operating reserves that we have under our reserve policy, this rate stabilization fund. The reserves that we have, they're internally tracked balance. They have nothing to do with GAAP accounting. Okay. Rate stabilization is GAAP accounting. It's how information appears on the financial statements. So nothing is happening on the financial side. No new money is created, no new money is spent. So we go through the way we set our reserves, our current methodology with the board adopts a reserve policy. And we, some of you are familiar with how we go through that. We do stress testing, we do look at extreme but plausible events. We said, we want to hold adequate reserves so that we can withstand those modeled risk scenarios if they were to occur. And we set a target and we build up to that reserves. Nothing there is impacted. That continues. This is basically how the information appears on the financial statements. We can use this GAAP accounting to defer revenues and financial statements and recognize them later, as we discussed with the program example.
I'm following, but I'm also capturing the thought that since we're a nonprofit, you can do this as opposed to a for-profit, which you can't just say, I'm going to defer my revenue because I don't feel like paying taxes this year.
Yeah, you cannot do this. This would be a SEC investigation program.
So
But in the government, GASB 62 allows for this.
So the other thing is our reserve policy isn't in the notes to the financial statements, right? It's because it's not an accounting thing. So.
But there we have to follow GAAP. And the auditors won't allow those. We have limited management disclosure where we can talk about some things, but just follow GAAP rules. So the criteria now, GASB requires board approval, the governing body, to adopt this accounting. So we have to take it to the board. Here's the criteria. We ask some flexibility so that we can manage the positions, the net positions. And we can also recognize for the years where we didn't have this policy, like this year, our budget will be taken to the board. Media budget shows we'll have we're forecasting to have a good year at position. So we can use this year where we can show a much lower net position and defer a lot of this revenues and catch up for, to build up to the level that we have for earmark funds. So we ask for that flexibility, and what we're asking, the criterion we have here is, at the end of the fiscal year, we'll work with Mike Maher and we will defer revenues, but it will not exceed the balance of the earmarked funds. And then the gap recognized net position does not fall below 2% of revenues, and that's to make sure that we don't go negative in how we state our net position. And then the flip side of that is how do we recognize deferred revenues? If the gap net position would fall below 2% of revenues for that fiscal year, we would transfer funds or recognize deferred revenues. And any fiscal year and to adjust the rate stabilization to adjust it to the balance of earmarked funds to make sure that we have amount deferred that's in line with the amount.
The lesser amount or the greater amount?
That's not the greater.
You could draw it down to the lesser of or the greater of.
So basically what we're saying is we will draw it such a way that the net position, to the extent we can, net position doesn't fall below 2%. So let's say revenues are 500 million. We don't want to go below 10 million in net position. So we would recognize it to the point to get to 10 million. But yeah, it's not falls below 2%. But if we wanted to recognize it up to 5% of revenues, a higher number, we want that flexibility because we don't know what may materialize and what the dynamics are. So we ask for that flexibility. So we put the 2% as a falls below 2%, but it doesn't mean we will equal to 2%. We want some discretion in that. Yeah, so that's the overview, and we will be taking it to the board. We have a lot of items for the March agenda, so we will, with Finance Committee's concurrence, we're going to put this as a consent item because again, this is not affecting anything financials of the company. Just the reporting, how we report.
All right, this is a informational item. I was asking my questions as we went along. I think others were. Any more questions? But I do want to have public comment on this. Probably no one that's going to make public comment, but any questions or comments? Sergio or Harsha?
I was holding my questions. I'm just curious, what was the impetus behind making this change now?
Because we have close to, when we started this fiscal year, we had close to 100 million in earmarked funds. And it'd be nice if we can recognize that somehow in our balance sheet.
I see. Great, and obviously we don't weigh in on this with this committee, but I expect that when the audit catches up to past the point where this is made, that we'll be hearing about it in the audit presentation.
Yeah, you'll definitely see that.
And they'll, as we just heard, they'll weigh in and give feedback as to whether there's any issues. Great, I don't have any other questions.
With that, I'll open it up for public comment. If you're appearing remotely, please raise your virtual hand if you'd like to make a comment on this.
No public comment, Chair.
I'll close public comment and then bring it back. So this is informational. So this item is done. Now we're on to committee staff remarks. Remarks from the committee? No? Remarks from staff? No? All right, we can stroke that off. And now we're going to go to closed session, which is a threat to public services or facilities. And before we actually close this go to closed session. I'm going to open it for public comment on the closed session. If you're a member of the public and you'd like to make a comment on the closed session, please raise your virtual hand.
No public comment.
No public comment. I will close public comment and we will move to closed session on this item. We're back from our closed session, and I will say there are no reportable actions. And we will adjourn the meeting at 3:39 p.m. to our next meeting, which will be in September of 2025.